In this episode, we're going to look at improving your credit score. But before I do that, just to give you a very quick reminder that in the first episode, I talked about money and budgeting, and this whole series is dedicated to money management. So again, a very quick reminder, in terms of budgeting, make sure you live within your means, make sure that you save some money on a regular basis, and make sure that you're investing some of your money into capital appreciating assets for your future, and have a rainy day or a slush fund which you can save, and also have a fund where you can give some money to charity and the causes which are important to you, and also make sure you've got some money left over for fun. That might seem like a lot, but if you budget, take out costs that you don't need to be paying for, or which are extra invisibles which you haven't thought about, you'll so soon see that the habit will enable you to start saving more money and becoming more financially successful. So in this episode, we're going to look at credit. So credit cards allow a person to borrow money from a lender and pay it back later. Sometimes what that means is you end up paying interest if you don't repay all of your debt within the agreed time scale. So you can pay it back in full, or you can pay it back in installments. Installments mean you'll have to pay interest. Make sure you budget for that interest so you can see exactly how much it's costing you. And different cards charge different rates of interest, so you make sure you're aware of that. Cards also have limits on how much you can borrow and have minimum repayments. So the better your credit rating and the better that the credit card company knows you and your income, the more likely they are to increase your limit. Although you can ask for your limits to be increased yourself. If you think you're spending more and you can afford it, then you can do that too. Alongside that, you can also have what's called a charge card. A charge card basically is where they take all the money from you at the end of the month. So you can't pay in installments and interest. They just take out the whole amount in one go at the end of the month. Usually what I find is you can have larger limits on charge cards and smaller limits on credit cards, but that's something for you to think about. But for most people, credit cards are going to work better. Now, credit card gives borrowers protection. So if you buy something from anywhere, usually between £100 to £30,000, it's protected under Section 75 of the Consumer Credit Act. If something goes wrong with the purchase, or if somebody gets your credit card details and abuses them, a full refund could be issued, depending obviously on the circumstances. Usually I've always seen refunds being issued when somebody's credit card has been fraudulently taken by somebody else. Credit cards will also help borrowers build their credit rating, and that's important if you're looking to get loans, personal loans, business loans, or if you're looking to obtain a mortgage for your home. So that additional protection on credit cards is good. You don't get that on charge cards, and you don't get that on debit cards, because obviously with a debit card, money is taken from your account straight away, so you have to have money in your bank account to make that particular purchase. And there's three credit reference agencies that I come across often. The first one is Equifax, second one is Experian, and the third one's TransUnion. And each credit reference agency uses its own ranges for credit scoring, and some go up to 999, some are less, but these are agencies which keep a record of all of your transactions, especially in the last 12 months, and then they give you a rating, and then people who are looking to lend you money or enter into a financial transaction can and will usually do a credit check on you to see if you are credit worthy, and the higher the score, the more credit worthy you are. But there's no real uniform credit score. Each lender will score you differently based on your own credit file, and credit scores are used to predict your future financial behavior based on your past. Because one thing we do know is if you want to look at future performance, always look at historic performance, because that usually gives you a good indication. So if somebody pays their bills on time, pays all of their credit cards off on time, doesn't have any CCJs, has no defaults, then it's likely that person is going to continue that behavior and keep making repayments. However, if they have a record of defaulting or not making payments on time, that is an indicator, not conclusive, but it's an indicator that in future they might have some issues. It could also be an indicator that perhaps they haven't got enough income to pay their expenditure on time, and therefore they are not as credit worthy as others. And lenders will either accept you for a loan or a new credit card or a mortgage based on your credit score. So it's important, A, to find out what your credit score is. You can do that with Experian, Equifax, TransUnion, or one of the other credit agencies, and then work at how can I improve my credit score by making repayments on time. And I'm going to share some of the bits with you today, tips in terms of how you can improve your overall credit score. But if there's a lack of history on you, there's missing repayments, and there's instability in terms of you keep changing your address regularly, you keep changing your phone number regularly, all of these things can contribute to a lower credit score. So here's some of the things I think you should be doing. This is not an exhaustive list, but I've kind of come up with some real nice easy stuff which I believe everybody can implement, and this will help you to improve your credit score. Number one, get on the electoral roll. So speak to your local council and make sure you're on the electoral roll, and therefore you are visible and identifiable. Number two, cancel all unused credit cards. Sometimes people have, I've seen sometimes 10, 15 credit cards. They don't use most of them. They say, oh, just keep this on here in case I ever need it. That's not good for your credit rating. If you're not using them, cancel them. If you're renting, sign up for the rent exchange initiative with Experian. That's good for you. It's going to help you improve your credit rating. Number four, do not withdraw cash on a credit card. Use your debit card for that. Use your credit card to make purchases and then make repayments at the end of the month or whenever you can. Do not apply for too many credit cards all at once, as applications will show up on your credit report, and then that doesn't look very good or strong, because people will obviously think, hold on a moment, why are they applying for so many credit cards all at once? What are they intending to do? Why do they need so much credit in one go? What's going on here? There'll be more questions than answers. Do not use payday loans, because A, they're expensive, B, it demonstrates that you are struggling financially, and if you're struggling financially, why should somebody give you more credit? It's obvious, isn't it? Pay for your insurance upfront if possible, rather than spreading it over a certain number of months. Also, that's going to help you save interest, and if you save interest, that means you'll have more in terms of your budget for things that you can spend on. If you're paying interest and there's more money going out, less left for you. Again, quite obvious, but a lot of people don't think about these small things. And finally, make sure your details are consistent. Same phone number and address across everything for as long a period as possible. Again, it shows stability, it shows visibility, because obviously the information available about you out there is what people use to judge you, and even then agencies and lenders aren't sure if they know everything about you, so there's a mismatch in terms of information, and they just have to go with what's available out there. Nobody really calls you up and says, can I have the whole story, and why are you where you are? Sometimes they might do if you're applying for a mortgage. But most people just judge you on your credit score, and it's that common answer which most of us don't like, which is the computer says no. If it says no, you can't have more credit. Now, it's important that you're aware of county court judgments, and these are court orders that are issued to borrowers who fail to keep up their repayments and do not plan to pay their creditors or have had missed payments, and therefore the creditor has gone to court and said, can you give this person a county court judgment? They are not good for you. They will stop you getting credit, they will stop you getting mortgages, and they are going to be a pain. How do I know? Because I've had clients in the past who've either had a CCJ or been unable to repay a particular loan, and then to get that CCJ removed is not as easy as you may think. You can get it removed by repaying the debt and then getting a discharge notice. Best to avoid it in the first place. But usually what happens is a warning letter is issued at least 14 days before action is taken in the form of a CCJ, and that's given to the recipient, and then they've got time to seek financial advice before anything moves forward. If the borrower does not keep the terms of the CCJ, the creditor will then ask the court to send bailiffs to collect the money. So somebody will be knocking on your door, and then they'll take away your furniture or any other goods, or if you've got cash, they'll take away the cash, and then the creditor can ask for the money to be paid directly from the borrower's wages as well. You'll see this sometimes with the benefits agency, child support, maintenance. I've seen it with council tax, where they approach the employer and say, can you please repay this debt to us? So that can happen too. And worst of all for you, if you own the property, the debt can be secured against your property. They can force you to sell the property. That usually doesn't happen on the smaller debts, but in the future, if you ever sell your property, you need to repay that debt. Interest gets added on. You might have owed £3,000, and in 10 years time that £3,000 could be £7,000 with all the compound interest accumulated. I've just used that as an example. How I haven't worked out the exact interest, but in principle you get the point. And then CCJs remain on a credit file for 6 years, so a very long time after they've been issued. And if they're not, if you don't pay them off, then that's going to hinder your chances of getting additional finance or debt. But if you pay it off, then you can have a discharge notice. So these are some of the things that will help you with your credit score. Credit scores are important. Number one, find out what your credit score is. If it's low, work on the things I've just shared with you to improve your credit score. But don't go out there and get more credit just because you can get it, because remember, at the end you have to pay it off. If you don't pay it off, it can lead to CCJs and a bad credit file and sleepless nights and all the other headache and rigmarole which you don't need. You just need to be disciplined with money. You need to manage your money better, and this particular series will help you do that. If you haven't seen the first episode, do watch that, because budgeting, I think, is one of the most important things everybody should be doing in terms of money mindset. This one obviously will help you with your credit, and if you like what you've heard so far, please click the like button below. Also comment with any questions you have. Comment in terms of your feedback on this content. If you like it, fantastic. If you don't, let me know what else you want, and then I'll try my best, obviously, to give you the content that you want in terms of money management, and feel free to ask questions. The next episode is on savings. Again, a big one, and savings can have a big impact over a given period of time. I'm going to cover that for you in detail, so do watch that, and until next time, bye for now.